Right, so let's take a look at this commercial project and let's have a chat about commercial property in general, how we can save some tax and what we can do. So this one I'm currently refurbing at the minute. This one's actually going to be our own offices, but let's talk about the costs and let's have a little look around as well. Right, so commercial property, what do we need to know? Well, it's very different to residential property. I'm going to talk about it in the sense of investment, of course. Now, this particular one is an investment, but it's a building that we're buying for our business to operate in, to house our staff. However, some of these points are going to remain exactly the same. Number one, stamp duty. When you're buying commercial property, your stamp duty is always going to be lower than it is with residential property, because with commercial property you're going to pay non-residential rates. That means you pay 0% up to 150,000, then you pay 2% up to 250,000, and you pay 5% on whatever amount is above that. However, with residential stamp duty, you're going to pay 5% additional rate and then whatever the stamp duty is. So it's always going to be more on residential than it is on commercial property. So one benefit to buying commercial, whether you're going to use it or whether you're going to let it out, is you save on the upfront cost. So as an example, I'm buying a £200,000 commercial building at the moment. That one's just purely for investment purposes. It's got a tenant in the building, and that one is going to be just £1,000 on stamp duty. Whereas if you were to go and buy that as a residential property for £200,000, you're going to pay a lot more, in fact more than 10 times more on stamp duty. So that's a massive benefit in the commercial property world. Now, another massive benefit is something called capital allowances. This is one that most people miss out on. Capital allowances is a massive tax break which is exclusive to commercial property, and most accountants have no idea that this exists, or they certainly don't know how it applies properly in the context of commercial property. So you need to get yourself a capital allowances specialist. That's somebody who's going to carry out a survey on the building, and within that survey they'll calculate roughly how much cable you've got in the walls, light switches, plant machinery, aircon units, door handles, and they'll throw that all together and create a report, and then they'll tell you how much. Now, as a rule of thumb, you're often looking at around 25% of the purchase price of the building. So if this building cost me £320,000, I can expect there to be capital allowances of about £80,000. Now, what does that mean? That means I can effectively offset £80,000 from my profit. So rather than pay 25% corp tax, which is applicable to me, it might be less if your profit's less, but rather than paying 25% corp tax, I'm now going to pay 0% tax on that £80,000 of profit and basically make a £20,000 saving. Of course, it's not free to get a capital allowances report done. It's usually charged at a percentage of the amount on the report. So if it's £80,000 saving, they'd charge me about 4%, which means in that particular case, I'm probably going to pay somewhere in the region of £3,200 to get the report done. And that £3,200 is going to save me £20,000. It might seem like an expensive piece of paper, but it's well worth the money. So if you think you might have capital allowance in your building, by the way, if you've had a building for 10 years, it doesn't mean you can't claim. Quite the opposite. You might want to go and look into getting a claim done. If you think you might have capital allowances available, whether in your existing or in a new building or one you're about to purchase, then get yourself in touch with a capital allowances surveyor. The first step should be entirely free, which is where they create an illustration for you and give you an idea of how much you can save, an indication as it were, and then you'll be able to instruct them. Once they're instructed, they'll be able to carry out that report, provide it with you, and then that report is what you take to your accountant, who then offsets it against your profit and loss statement or against your tax bill. So that's capital allowances. So you've got stamp duty, massive benefit, and then you've got capital allowances. Now, if you're going to rent out commercial property, so you're going to get tenants in, then often you're going to do that on what we call an FRI lease, which means that you're going to have a longer lease. You might take someone in for 5 years or 10 years at a time, and FRI means it's a full repairing and insuring, which means the tenant is responsible for repairing and insuring the building. Whereas if you look at your standard residential property, you know, the boiler breaks, you as the landlord are responsible for fixing it. If you take a commercial property on an FRI lease and the boiler breaks, then the tenant is responsible for fixing it. So a lot longer leases, could be 5 years, could be 10 years as an example. And on top of that, it's very hands off because it's FRI, which means they're responsible for insuring the building, they're responsible for repairing the building, and you're just responsible for collecting the rent. You can also take much bigger deposits with commercial. You're capped on how much deposit you can take with residential property, but with commercial, you might hear people taking 3 months deposit, 6 months deposit sometimes, and that's perfectly fine. So you've got a lot of protection. Now, it's not all upside in a commercial investment game. If you are going to go down the route of letting out commercial property, what do you need to be aware of? We need to make sure that you've got a strong tenant in place, because ultimately you're housing a business. If it's not a strong business, then there's every chance they might not be able to pay. Now, an advantage is if they can't pay, you can kick them out very quickly, whereas you can't do that in residential property because people have rights to remain within the property until you go through the court process. As you'll probably know, could take months and months and even a year sometimes to get a tenant out, whereas in commercial property, if they haven't paid for 21 days, you can start taking action to get them out very quickly. You can in fact get them out straight away. So totally different, but of course there is a risk that they might not be able to pay if their business doesn't work. So think about the strength of the business you're putting in. If you're putting a strong chain like a Costa in, who's got, you know, massive amounts of cash to deploy, or I mean, they're generally franchises, but you know, there's a lot stronger chance that they're going to be able to make the rent than if you put like a brand new startup business, and that business, and I don't want to name any businesses because I don't want to get trolled, but that business isn't a particularly strong business. So that's what you want to do, is make sure you get a good strong lease. And you can buy buildings with people in. That's also very useful. There might be 6 years left on a lease and stuff like that. That is quite reassuring. If someone's been in the building for 20 years, they've just renewed for another 10, I mean, that's a very positive sign, especially if it's a strong tenant. Now, the potential downsides are, if your tenant does move out of a commercial, generally speaking, they can often take longer to find a new person for. So your void spaces tend to be bigger, and the surveyors will use a calculation to work out what the void might be in the particular area you're in for the type of building that you're in, and that's generally a good indicator of what you could expect in terms of voids. So they are valued differently, often valued on leases, as well as the bricks and mortar. They are different in terms of legalities, and they're definitely different in terms of tax. So if you're going to go down the commercial space, make sure you get the education. However, it's a great and exciting space to be in. So if you want to hear more about property investment in general or commercial to property, then hit the like and subscribe button, and make sure you follow me for more content just like this. You're welcome.